Cinda withdrew from the plan to increase its holdings of Chongqing Ants with $930 million, adding surprise to the resources. Cinda Asset Management has unexpectedly withdrawn from the recapitalization of Chongqing Ant Consumer Finance barely 3 weeks after announcing it, adding a surprising twist to the restructuring of China's largest fintech company. Cinda said its board decided not to participate in the plan to pay 6 billion yuan for an additional 20% stake in Chongqing Ant, according to a filing to the Hong Kong Stock Exchange signed by the Bad Loans Managers Chairman Zhang Ziyai. After further prudent commercial consideration and negotiation with the target company, proposed not to participate in the share subscription, the company said, without naming Chongqing Ant. The Beijing-based company, set up in 1999 to manage the bad loans of China Construction Bank, did not say why it withdrew from the December 24 plan. Cinda owned 15% of Ant through its wholly owned unit Nanyang Commercial Bank as of June 2021, according to regulatory filings. Chongqing Ant is a consumer finance company 50% owned by Ant Group, the world's largest fintech company, and an affiliate of this newspaper's owner, Alibaba Group Holding. It houses the two consumer credit services Huabei and Jibei, which provides small loans to online shoppers and merchants. Ant Group had been undergoing a restructuring and review of its myriad businesses ever since its $39.7 billion initial public offering was foiled in November 2020, days before shares were due to commence trading in Shanghai and Hong Kong. Chongqing Ant fully respects the business decision made by its investor, the company said in a statement, adding that it would actively hold discussions with investors, continue to finalize the capital increase proposal as soon as possible in accordance with market principles, and ensure the rectification work on the consumer finance business is effectively carried out. Redefining fintech. In its announcement last Christmas Eve, Cinda had agreed to raise its stake in Chongqing Ant, part of the plan to raise Chongqing Ant's capital base to 30 billion yuan from 8 billion yuan. Ant Group would continue to hold 50% of Chongqing Ant in the restructuring of Jack Ma's fintech empire under regulatory oversight. Ant Group was required to bring its microcredit and consumer loan businesses under regulatory oversight after its dual listing was called off. Chongqing Ant was created to take over its Huabei and Jibei businesses, and the vehicle is expected to complete the process within a year, according to a statement from the Chongqing financial regulator in June 2021.